Hello, my name is Steve Bigelow with the Candlestick Forum. Getting a lot of questions or debates on whether price action trading is better or worse than candlestick analysis. And there's one major flaw to that debate. Candlestick analysis is the ultimate price action trading strategy. Everything built into candlestick analysis is identifying what's happening based upon price action. As we're seeing in the Dow, up here in the overbought area, we're starting to see indecision. Now remember, the price action here is more identified by candlestick signals: hanging man, shooting star, spinning top, Doji, flat trading. That is what is more refined as far as identifying what's going on in investor sentiment. What is this price action actually telling us? And the price action is telling us we may still be in an uptrend because we're above the T line. However, there's a lot of indecision up here. You want to be much more prepared for a price move that could go either way. Now, the Dow is just not the only indicator of investor sentiment. The NASDAQ, when you're looking at multiple indexes, it's basically telling you what's going on in specific sectors and or what's going on in the market in an overall general sense. As you can see, there's been a lot of bearish indecision in the NASDAQ, and that's more illustrated by the fact that every time they open up positive, they trade it lower. Open up positive, they trade it lower. So they're trading below where they open, and stochastics heading over. What's the first likely target now that the NASDAQ didn't hold the T line? Probably going to come back and test the 50. That means there's probably still a day or two yet of bearish trajectory. Price action is what creates patterns. The Japanese rice traders have just identified what those patterns are for us, both the signals and the patterns. A hammer that bounces right smack dab off the 200, bounces back up above the T line, giving us a morning star signal and a J-hook pattern. We already know what the conclusion is of or the prospects are of a J-hook pattern. Wave 1 and wave 3 are usually the same. This tells us we've got high probabilities that if this starts trading positive, you can be buying. And if it breaks out through this level, that's further confirmation that we're in a J-hook pattern with the expected results. What candlestick analysis does for us in modern times is there's other indicators like the moving averages and the T line. So if we see a bullish engulfing signal in the oversold area, we've got much better, say, analytical ability to say the next uptrend is starting. And where is it starting? Obviously, right off the 50, through the 200, through the 34, through the T line. That tells us the bulls are in control. What's our next analysis? Wave 1, wave 2, the potential of wave 3. Anytime we see a bullish signal, especially out of the oversold area, the Japanese rice traders say the probabilities are pretty strong that you're now in an uptrend. And that word probabilities is the important factor. Not all uptrends are going to start, but the probabilities of being in an uptrend is extremely strong. So because patterns tell us what's going on exactly in human nature, time after time, that's why we recognize the patterns. We can calculate with a much higher degree of probability what the next price move is going to be. So if we know a classic pattern is a fry pan bottom, which creates a strong price move, and then a pullback right here to the T-line area. The next move up tells us we've got a classic pattern because now we have the making of a J-hook pattern. And what's the prerequisite of a J-hook pattern? A strong price move. That came out of the fry pan bottom. And what told us that this had a strong upside potential? We can add the fact that we have a Doji sandwich. Big candle, Doji. That candle's going to be the same as that candle. And what's the implication of a Doji sandwich? More upside. And if there's more upside, again, that confirms our J-hook pattern. So recognizing price action, which in this case we call patterns, is much more clarified when you know what the candlestick signals and pattern combinations are. So UGIA was a strong pattern. Look at the J-hook pattern bobble breakout from the 50 to the 200. Notice where it pulled back right to the T-line and did another bobble breakout. What's it telling us? This big fry pan bottom pattern is confirming, giving you much stronger probabilities that you're in a good positive trade. Works same way on the bearish side. If we can identify what's going on in investor sentiment, we know, again, either using the term pattern or price action, that if the lower this keeps going, coming out of a kind of a dumpling top, this is the result we're expecting. So we're putting ourselves in situations where the probabilities are extremely strong that we're not only in the right direction, but in the right direction that might create a very strong price move. So anytime we see a candlestick sell signal in the overbought area, that's good evidence there's been a change of investor sentiment. We're heading down. You add the fact that it closes below one of our strongest indicators, the T-line, and an indicator everybody else is watching, the 50-day moving average, we know we have a high probability, as our recommendation was today, that if this opened lower, you wanted to be going short because it was telling you the 50 was acting as a resistance area. Look for more downside. Where is the downside? Probably back into the trend channel. So anytime we see these type of actions, wave one, wave two, especially failing at a level that we're watching, the T-line, and knowing what our signals are at that level, there's your Doji gap down, your bearish best friend, implying there's going to be more downside. What is our first target? Seeing what's happening at this level. When they gap down today, what did that tell us? This level is not going to act as support. We probably have wave three in progress. The important thing is, this is not rocket science. This is just identifying the signals and then seeing where the confirming indicators or the indicators not confirming. So we got a bearish signal at the 50-day moving average, and they gap it down through the T-line. First target, if it goes through there, wave one, wave two, going into wave three. Prices move in waves. Candlestick analysis is just merely identifying when those waves are going to be started and what the magnitude of those waves will be. So we always have an open invitation. Join us in our chat rooms each day on the Candlestick Forum. We've got 120, 150 people in there at any one time. They're all looking for the same type of patterns. It gives you two benefits. One, people pointing out some very good trades. And two, if you're learning candlestick analysis, it greatly expedites your learning process, because if you don't know what this pattern might be, you just say, what pattern is that? And you'll have people coming in and saying, that looks like a wave three bearish J-hook pattern. You want to be shorting on weakness. So you'll learn a heck of a lot faster what the high probability trade setups are. That'll be it. We'll see you in the chat rooms.